right, here we are. It is Friday, August 26th, quarter past the hour. It is Friday. All right. Oh, man. Let's see here. We need to adjust this, rearrange the furniture, and I'm good. How you doing, all? Like I said, it's Friday, and this is the final hour to expiration. Hold on, I'm just in your left ear. We have to bring you over to the right ear, too. There we go. Broadcasting in stereo now. Let's see if we can move this up like that. So today was a rather unsurprising day, but I guess the extent of the move was surprising. Jerome Powell came out and he said things are going to be really bad. There's going to be a lot of pain before we have gain. And quite frankly, I think that he was misrepresenting the level of pain that we expect. And I think the market is starting to come around to that. They have literally decades to catch up with. The intense, just look at it this way. They have still $9 trillion on their balance sheet. We still have 8.5% inflation. There's no end in sight. He doesn't see any end in sight. They are going to, while we have that kind of inflation, they are going to raise interest rates 0.75%, 1% from now until sometime in 2023. That, my friends, and also, I don't know if they've redefined what a recession is again, but the preliminary GDP came out negative again. And so let's see if 2 negative quarters is not a recession. Is 3? It's the lies. It's the lies. There is nothing but lies. They think that they can just talk their way out of it, but it's not going to happen. Well, it is going to happen, and this market is going down. It's going to go to hell. Eventually, I'm sure that there's going to be plenty of forks in the road, so to speak, along the way. And let me see if I can get the... there we go. Yeah, so I'm still at my vacation home, and I'll be here for at least another 10 days or so. So we have our makeshift studio in place, and we will attempt to do a final hour trade this week, today, and all of next week. I've been thinking about taking off Tuesday and Thursday of next week, so if you can indulge me that while I'm here on the island, I would like to get a little time to myself. The weekends are good, the mornings are good, the evenings are good, but I need some days too. All right. Let's see what's going on. See if we can pick off something that will make sense. Oh. Look at that. Look at that drop. Man, let's see. Let's see if we can measure this move. All right, so go to trading view. Go to trading view. There we are. And let's move. Let's see, how far up did we go? In the pre-market, we almost made it to this. I think the market was trying to front run the Fed because historically, after a Jackson Hole event, the market typically goes up. But here, everyone got a spoonful of medicine. And so the market was trying to front run it in the Globex session, which is the pre-market. And then they realized the error of their ways. Powell came on at 10. So the market dropped quick, a little bit of a rebound, and then just dumped big time. Now, we thought that we would take advantage of this, did not anticipate that we would move as hard. So I put on a couple of small trades here at the bottom of this node, thinking that, okay, we could get a little bit of a retracement, and whether it stayed here or just kept on going down, either way, it would have been some nice profit. It was in profit for a little bit, but it had no intent to retrace. So it went from this T1 node, and now it's moving down. It's moving down here. And if you look very carefully, man, we have to go way, way down. Okay, so right here, here's a, actually we're calling this the T0 node now. And then there's the node way, way down here where I think our destination is. So let's say somewhere in the middle there, let's call it 3940. So I think that's where we're ultimately going. Not today, but probably next week, because we have entered this huge volume well. We've gotten by one LVN, or started to. We temporarily touched it, tested it, came back up. Now we're going back down. The next gateway to hell is at 4044, which is another LVN. And then there's a lot of open air here, low liquidity. And I expect the market to move down through there. Now that'll all probably be next week. So the market has a lot of correcting to do. And I think that it may be a very quick move down to the lows that we experienced back in June. Was it June or July? What was the ultimate low here? Let's go back. Let's go back. Yeah, July 14th, was it? Yeah, looks like July 14th. Was that the real low? No, it was lower than that. I knew it was in June. Yeah. June 17th. Here we go. Where the low was at about 36, 37 and change. And so we rallied all that way. Now, some people who are extremely optimistic will call this just a healthy correction. Just a healthy correction. But you see, we've entered this huge volume well here. Mammoth. And the next stop is this value node here, down here, like I said, at 39, I don't know, 39 something or other. But let's call it between 3960 and 3900. That's our next step. And then from there, we will move through the gauntlet here. We've got a little bit of a gauntlet here that we have to get through. And that will bring us down to the ultimate bottom here, to this bottom. So all of this is relatively low liquidity, low volume. There's not a lot holding us up here. Now, we could look at the historical volume and go way back and check that out and see if that will provide any kind of support or solace. As you can see, here's this massive volume well, this big volume node here, and then it all kind of drops off. And then below the low of June, there's nothing. There's nothing but air. So that's what I expect. I expect all next week we'll probably work through this. There's a possibility we may get tied up in here. Maybe the plunge protection team will come out and try to keep the market propped up as long as it can. But that's going to cost them dearly. And so I suspect that price will just continue to move down. And until finally we get to the low here and then see if we can really get the party started, right? So that is my prognosis here. Now, how long this will take, that's a good question. It didn't take very long for us to move from here to here. Let's see, how long was that? That was a major move, man. But this move is like straight down. How long did this move take? So from, and that was 4150 all the way down to, so that was a 5, a 500-point move in 1, 2, 3, maybe a week, 7 days. So I think that something like that can easily happen, and we'll be testing the bottom of this node and then testing the lows. So I think that's where we're going. And you know, I'd like to know what's going to hold us up. Inflation is not going to subside. Interest rates are going to continue to go up, which means that Powell has said in Jackson Hole he's fully expecting to administer the pain that's necessary to slow down this unbelievably heated market. It's not a heated market. It's an over money supplied market caused by the Fed. Actually, and you know, let me say that technically caused by the Fed, but really caused by the government and their spending. And then the Fed just monetizing that spending. And there's really no stopping it. I mean, you cannot. I mean, unless you can find some way to suck out about $10 trillion out of the economy in the next couple of weeks, and that's not going to happen. The Fed's balance sheet hasn't budged since they said that they were going to start trying to lighten the load there. There has been no progress on that. They can't. They just can't do it. It's just not physically possible. I suppose it is possible, but they don't have the gumption to do it. They already accept the fact that they're going to be causing a lot of pain, and that pain is going to be coming soon. And it's going to be horrific. Really, really horrific. This relief rally here, that's pretty much what it was. It was kind of, hey, make the peasants feel good before we cut their legs off. That's kind of like what that rally was. Pretty much. All right. Let's get back and say hello to the peanut gallery here. And we got, hey, Dan, how you doing? Nice to see you. And Stephen Stelmack going on a continued low march. I'm not sure what that word is. Continued. I don't know. I have no idea. He is. Hello, how you doing? And Gunny Highway, there's a new face. When you get to a fork in the road, take it. Yes, that's an old Yogi Berra comment. That's right. We're going to take forks. Anton, hi Ernie, was your morning trade profitable? No, it wasn't. I just showed you that I put on, risked about $200 to make $2,300. So, and if it went, it was great. If it didn't, no big deal. Swap nil. Ernie welcomes sarcasm, but not that kind. Let's see, what was the sarcasm? Was your morning trade profitable? I'm not sure that there was sarcasm in there. There may have been. I think it was just an honest question. Could have been sarcasm. I mean, but see, my first language is sarcasm, and I didn't detect sarcasm. So highly doubtful that it was sarcasm. All right, so I don't know. That's me. And let's see. NorCal Joe says 36.38. Yeah, that was the bottom. And Vadim, irony, gloomy mood all around, I gather. No, absolutely not. There is nothing gloomy about this market. See, there is nothing that can hurt us in this strategy, or very little that can hurt us. Actually, the bull market rally was a little bit of a challenge from our mind point of view. And I went sideways for most of that time. And so I guess if you want to call that being hurt, I still made a little bit of money or didn't lose any money. And because it was so difficult just to sort of settle the what you saw in the economic reports and then what you saw in the economy and then what the market was doing. It was incongruent. It didn't make any sense whatsoever. And so that was the toughest part, really, the bear market rally. Going down, man, we make money left and right going down. That's no problem. All right, so NorCal Joe says, I'm thinking we end at 40.50 today. Yeah, I don't know. That could be. I was thinking 40.44, but 40.50 is, it could do that. It could get down there. I think it's going to touch 40.44 because that's an LVN and then bounce off of it. So Anton says, no, man, I was curious how it went. See, I knew it wasn't sarcasm. I'm telling you, sarcasm is, I belong to the National Society of Sarcasm. So Anton's saying, I lost decent money this morning during the speech. Yeah, I lost a little bit of money. I lost a couple $100, but that, nothing. Really nothing. 1%. I lost 1% of my trading capital. Actually, a little bit less than 1% because my trading capital was up to a little bit above 27,000, so it was under 1%. What did I lose? I lost $210. Let's see, 210 divided by 27. 5. I lost. No, really, is it that small? No, 210 divided by 27. All right, yeah. So I lost 0.75%. That's what I lost today. I don't know. What are we going to do? I lost 0.75%. Ernie, how much? Let's see. I'm sorry. Got to read these in order here. Betty means I meant for those holding conventional investment portfolios. Yeah, I don't have anything in a conventional portfolio. I am holding SDS, which is a triple leveraged short the S&P, but not a big position. Maybe, I don't know. I think something like a couple thousand shares or something like that. So, yeah, I'm holding something, but that's about it. Just a big short position. I've held that right from the very top there. And other than that, what else am I holding? That's it. I mean, I have physical metals. I've been buying some physical metals lately. I think that they're at a good price. And I'm going to keep on buying. All right, Zach says, you look at the DXY and gold market. I feel like the DXY is a great indicator for money flow. Any thoughts? Eric. That would be Ernie, but that's okay. That's happened to me many times before where people have called me Eric. I don't know. Do I look like an Eric? Does this Greek look like an Eric? Are there any Greeks named Eric? So, like I said, I've been buying gold on the way down. Actually, I sold all my gold, all of it, in, where was it? I sold it in late April. Was it late April? Something like that. Sold it all in late April. And now I think I'm going to start buying it back. I'm buying a little bit back. I sold it all, and I've bought a very tiny bit back, just, a few of the Eagles, and that's it. But I even sold all my my pre-1933 gold. All right, let's see. NorCal Joe. Ernie, how much material is in the trial? Is this something I could look through most of it in a day or a weekend to understand the strategy by Monday? Yeah, if you think that that's what this is about, this is probably not for you, NorCal Joe. This service is all about teaching people how to become professional traders. All right, and you'll learn our process, our overall process. You'll learn our strategies, our methodologies, and so it's quite a bit more than just this is not an alert service, right? So there's quite a bit more to that. I mean, it's something that you can pick up the basics fairly quickly. There's no doubt about that. And but it's going to take a while before you, first of all, wrap your head around what am I going to say? It's the opposite way of thinking of most other trading strategies that retail traders are used to. Most retail traders are used to high probability strategies. And this is not that at all. What we do is we put on asymmetric trades where there is very little risk to them, but huge upside potential. And there's a lot to it. So, maybe you're super smart. Maybe you can pick it up in a weekend. Let me ask the people that are in the service. I mean, can NorCal Joe pick this thing up in a weekend and become expert? I'm sorry, I have to laugh. That's funny. Dan Benjamin says, a sarcastic comment would be, so do you need an armed escort to close that trade? That's right. That's exactly right. All right, Gunny Highway says, not a lot of Greeks named Ernie. Well, actually, my grandfather's name was Ernie, but his actual Greek name and my actual name is Eleftherios. So that, I guess that is the, Ernie is the Greek translation to Eleftherios. But no one's going to, they used to call him Lefty when he was a kid, because Eleftherios, so. But you'd be surprised. There are a lot of Greeks named Ernie. Let's see, Dan. That was not a question. That was an illustration of British sarcasm. Well, the Brits are very good at sarcasm, but I think the Jews are even better. Anton, good question. How much time does it regularly take to learn? Like I said, this is sort of like. If you're coming into a new profession and, you got guys there that have been there for a few months and other guys that have been there for a few years and other guys that have been there for decades. And you go up to the guy that's been there for decades and you ask him, so can I learn this over a weekend? You'd be laughed out. It's the same thing in any prop trading firm. You go to any prop trading firm that's worth its salt and you spend a minimum of 2 years before you start scaling. But I think that, most people, if they're quick and really adept and have great discipline, can probably get up to speed in a few months, I would say, where they can start being consistent. But the other thing is you're not even going to know if you're consistent until you've done at least a year or 2 years. So I think what you're asking is just the wrong question. It's just the wrong question. I've never, I've been in this business for 40 years. I've never, ever been in any kind of professional environment where where people want to know if I can learn this over a weekend. It's just a really bizarre question. Sorry. Michael Vota, are you streaming during the day or just Monday mornings and at end of day? Well, I'm streaming right now, and I stream internally in the group every day from 10:30 to noon. On Mondays, I do a Monday morning show where I do a clean slate volume profile analysis, and then every once in a while I'll do an additional stream. But streaming every day and sometimes twice a day to the public. But every day to the members of the service. There's Zach Dems. How you doing? Mindset is 100% in my opinion. Asymmetric is the way to go for sure. Thanks for putting the message out there. Yep. So the real challenge of this strategy for people who have been trading for a while, particularly if they're used to this sort of high probability strategies and pop and rock and all that other crap, the way most retail traders trade, is this complete change in mindset. And it's, from my experience, most pro traders trade the way we trade. Most pro traders do not trade the way retail traders trade. And I know that's hard for some people to put their head around. They think that, they love that dopamine effect of, lots of little wins and managing their risk. I call managing their losers. And they think that because the reason why they're not winning is because they just haven't figured out how to have the right discipline or the right, psychological makeup or whatever it is. They have no idea what their edge is, although they say they have edge, but they have no idea. They think the technical analysis is the bee's knees, yet they can never make it work. That's what you have to shed. You have to shed that completely in order to enter this service and be successful. Essentially, like the old parable goes with the master and the student, grasshopper. In order for you to fill your mind, you must first empty your cup. And that is so true in this. Really, you must. Let's see here. Mario Ackman. Everything is batting average. If you trade asymmetric with 5-to-1 reward to risk, but have a 15% batting, you lose money. Our win rate will vary anywhere from, when we're doing really bad, it could be as low as 25%, and when we're doing really good, it could be as high as 90%, but for short periods of time. We did have one period last year where we had a 90-95% win rate for almost 6 weeks. It was really sick. But generally, the average is about 50%, 50% win rate or lower, 40 to 50, I would say. And if you can do 40 to 50, you're going to be very successful in this system. And just do that consistently, throughout. All right, Luke Kinney. Does the service continue using these butterflies, or does it rotate through other experimental trades? Well, the experimental trades are just ideas that we have that I want to expose to the public. And it is kind of a marketing thing too. I talk about the strategy in grandiose terms or wide platitudes, but also give a lot of very direct information about what we do. And generally, we only do symmetrical butterflies. That's it, symmetrical butterflies. Out of the money, symmetrical butterflies, but that doesn't really begin to tell what we actually do. So hopefully that helps you. Aaron Henriksen. I think we are ending at 4070. We'll take that under advisement. I must have missed it in the Discord channel. Oh, I'm not sure I connected with that here. Hey, Alan, how you doing? Took me 2 months. Only the last 3 weeks, I'm getting some positive equity curve down 1706 at one point, now down 500. Yeah, and at first you were probably just trading too much too. And I recommend that people, when they start, they trade small. And you also probably started at a tough time. This whole past 6 months, January was like the worst time to start. Late June and through July was a very, very difficult time to start here. Any other time, it was super, super easy. Like if you had started a couple of weeks ago, you would have been flying high. If you started in the fall of last year, or any time last year, quite frankly, you would have been out of your mind, wondering how can anybody trade anything else? But then then there are those times that are challenging for sure. Luke Kinney, does the service continue using these butterfly? Or trade strategies used over the course or the 1 year subscription? I'll say it again. We only trade symmetrical butterflies. We experimented a great deal with broken wing flies and unbalanced flies and other premium collection devices. But when it comes down to it, when you want a pure system and you want to have pure asymmetric you want to have the pure asymmetry, and it makes it a lot easier if you just use symmetrical flies, and that's what we use. Yeah, I figured that, Mario. You were referencing just the ASIM approach is not the only thing. Well, the asymmetric approach is principle in what we do for sure, because through that asymmetry, very, very tiny risk with large upside rewards, there is a positive, long-term positive outcome. If you trade the other way around, the high probability strategy, there is a negative long-term outcome. So I don't know why people would trade that. Well, I know why they do it, but that's basically the way most retail traders trade, the high probability way, the asymmetry in the opposite direction, and they all wonder why they're losing all the time. And Zach says, 5-1, your break-even rate is 20%. Yeah, no, break-even rate is 20%. I don't know what you're talking about there. That doesn't make any sense to me. 3 to 10, you're in profit and can be asymmetric. No, none of that makes any sense to me, Zach. First of all, we don't hold everything to expiration. So if you're assuming you bring everything to expiration, you know whatever your math is, that's whatever your math is. It's not our math. So no trade. Also, you skipped my last comment. Oh, geez, sorry, Lance. Geez, oh, now I have to go back and find your comment. Because, I don't see any comment here. I've gone all the way back. I see no comment. You're lying, Lance. There's no comment there. The more I listen to you, the more this flips everything I've learned on its head. Yeah, and that's the thing, You see, the other thing is this whole idea of technical analysis, like it actually has some validity to it. It doesn't. I don't know any professional traders that are using TA or charting trend lines or moving averages. I'm sure there are some. I'm absolutely positive there are some. But most institutional traders I've known or worked with, it's just, that's a rarity. They don't even look at the charts. They're looking at volume profile and volume flow. That's pretty much it. So, the people who are actually making money don't do the stuff that retail traders do at all. At all. I don't know how else to explain this. So, and the other thing is that most people think that there's all kinds of strategies that have edge, and there are, but they're not all born out of technical analysis. They're typically born out of superior knowledge of various industries or various technicalities and that sort of thing. And yes, you can find edges on those, but that's not what retail traders are trading at all. They think that they can find the best setup with their RSI or MACD crossovers, and that they're going to find some sort of edge there. And there is none at all. Yet they'll keep on trying. And, someone will build a bot and say, hey, it does this and it makes all this kind of money. Of course, the bots never include slippage or commissions. Plus they lie, and it's all curve fit data. So you can't believe them. NorCal Joe says, the only thing I know that prop firms use among this is order flow on the DOMs, but that's super tough. It is. It's extremely tough. But I do a form of order flow and volume analytics using volume profile. And we do some order flow just for confirmation when we're looking at the options chain, and we look at the rate of change of various strikes at certain levels, but I found that it doesn't really help us in what we're doing. A lot of the prop firms are using order flow for scalping and that sort of thing, but we're not really scalping, so it doesn't really help us all that much. So, yes, definitely order flow is one of the tools of the pros. There are really only maybe three strategies that make money too. Let me just say that. There's arbitrage. Now, arbitrage is one way you can make money. Arbitrage is a guaranteed profit. And the people who are doing arbitrage are, well, there are two sets of people that are doing arbitrage. Well, there's true arbitrage and then there's statistical arbitrage. And there are a lot of futures traders that are doing statistical arbitrage, which isn't as good as arbitrage, but it's close. And I used to be a statistical arbitrage futures trader. But anyways, our pure arbitrage is done by the market makers. They make their money through an arbitrage between the bid and the ask. They essentially create liquidity for other market players, and they make their money not by going in the right direction. They make their money on the spread between the bid and the ask. That is their profit. So every trade they make money, a small amount of money, but they make money. And the more they trade, the more they make. All right. The other type of arbitrage is the front-running arbitrage of high-frequency trading. And that's a completely different game. It's totally outside of the realm of anybody that's trading here. There are some people who have algorithmic trading that with sophisticated algorithms and superior knowledge algorithms and AI and those things, yeah, they can make money there too. But again, that's outside of the normal persons. And then there are the discretionary traders that are trading on, selling premium. And that's essentially what we do. As far as I know, those are the only people that are actually making money trading. Right? There are no other people making money trading. If they are, they're lucky. Right? That's the way it is. Vadim says, is there any benefit to buying back the short strikes at some point during the trade? Yeah, once they get down to about 5 cents, you might as well buy them back. And just in case the market decides to go on a rip-roaring reversal, and then you can make a ton of money. And we've actually done that in our room a couple of times. And we tried it like 4 times one week last summer, and we won 3 times, won a shitload of money. It was crazy. And then since then, we try to put it on all the time. Every time our strategies go way out of whack and the short strikes get down to 5 cents, we always say, hey, let's buy them back. But I haven't seen any real great winners since then. So it's a rare event. All right. Let's see. Luke Kinney. I really like this philosophy for trading. I agree that using high probability trades has potential for high drawdowns. But why not use both methods? Because the high probability method is a losing method. That's why. It's as simple as that. I average 3% growth a week using high probability trades. And I'm going to say that you're lucky and you will not do that year in, year out. If you do, then you are an elite trader, Luke. There are so few people that actually do that year in, year out. All right? So if you say that you're averaging that, I'll believe you at your word, but I don't think you're doing that year in, year out. Let's see. How about trading supply and demand strategy? So how do you determine supply and demand? You determine supply and demand with volume, right? Well, that's what we do. We trade volume. So yeah, that's exactly, I guess it's another way of couching the terminology. Mini vacation. I like mini vacations. I'm on a mini vacation right now. Hi, what's the trade today? Sorry, no trade today. I mean, look at the market. It's just dropped straight down. I don't know. What are you going to... Can you catch a falling knife? I can't catch a falling knife. Let's look at the market. And let's go down to 5 minutes. So tell me, where do we put our strategy? I was saying that 4044 would have been a good place. That's where this LVN is here. And LVN is the low value node, this green line. See these arrows that I have? At first, I was thinking this first green arrow would have been a place. At first, I thought we would stay inside of this volume node, where this red area. And you can see where I was willing to take a trade. And so I took 2 trades thinking that we would come up to the center of the volume node, and that's where we would hang out for the rest of the day. That was my thesis. And that got blown through. It hung on there for a little bit and then just totally let go. Hit the first gateway to hell and passed through that. And now it's on its way to the second gateway to hell. And I think that it will definitely pass through that next week. Whether it will reach there this week, that's, I guess, in question. So I don't see how you trade this. You know, is it going to go all the way down there? Is it going to reach? I have no idea. There's, you know, maybe you have a way to do that. I don't know. You know, is it going to reverse? It might just reverse in the last few minutes. I have no idea. So, you know, I've already used up 0.7% of my trading capital. I don't want to use up anymore. Let's see. Andrew, how you doing, man? Nancy Pelosi is making money trading. Can we do an experiment with her strategy? Yeah, all you have to do is, all you have to do is have control of Congress and conduct insider trading, right? So you pass a law, or you get a law ready and set, right? And then you get all your orders ready. And then the day before you pass the law, you make your trade. And then you pass the law and you make millions of dollars. That's how Nancy Pelosi, unless you have that power, sorry, but that strategy is off the table. Right? I don't understand why she is not in jail, or anybody that's in Congress, both left and right, why they are not in jail right now for what they are doing. What gives them the right to do this? It is beyond me. I mean, all of our politicians are corrupt as hell. They are 100% corrupt. They are criminals. And they're not working in our interest. They are working in their own interest. They are outright criminals. I don't get it. How is it that we put up with it? Look at Nancy Pelosi's district. It has the highest rate of homelessness anywhere in the country, in one of the richest states, while she's making literally hundreds of millions of dollars on a $180,000 salary. All right, so NorCal Joe. So a bear credit spread on a market you see is falling hard is the type of high probability. So where am I going to put that? Where am I going to put it? And what if it reverses? I have, you might win. You just might. That's not the game that we play. We're playing rational things that we're not guessing. We have fairly static setups, and they're based on the market structure and the edge that we get by trading premium collection devices at the end of the day. Anything else, I'm not aware of other strategies that consistently will give me the kind of return I want. And so if you can pull a strategy out of your hat and you can do that consistently, or you think that, you can do this every once in a while when you get this kind of move, great. I don't know how to test that. So, I'm not going to take the chance. Luke, I just have a really tough time signing up for services. I have a spreadsheet with all my trades listed if you wanted to review. No, I don't, but thank you. I do not think I am an elite trader by any means, just looking to learn. Yeah, well, so that's completely up to you. I really don't care if you join or not, but if you do join, I will work with you 100%, and I'll do everything in my power to make you successful. It's as simple as that. So, and the price of the service is ridiculously low. I do this because I love doing it. I don't have to do it, but I love doing it. It is profitable for sure, but I love doing it. I have only been trading since September, and already you think that you're a 3% a month trader. Okay. Yeah, I've been doing this for like 6 or 7 months, and now I am a trading god. All right. Don't worry, Luke. You will hit those big losses very soon, and they'll come in droves, and you're going to wonder, what the hell was I doing? It's going to happen. Sorry to say. I know that you don't believe it, but it will. It happens to everybody. Happens to all the best traders. Let's see. Do 0 DTE options on SPX expire at the bell or 15 minutes later? At the bell. I don't think did he say 3% a week or 3% a month? If he's saying 3% a week, I don't believe him. I'm sorry. I just don't believe him. Yeah. I don't believe that he's growing his account 3% a week. Sorry. I'm going to call bullshit, Luke, and say that you're a liar. All right. There you go. Show me your account, and then we'll see. But sorry, that's not happening. It's either that or you've just been incredibly lucky. Because if you were trading at that rate and consistently 3% a week, then you would be the elite of the elite of the elite traders. And you've only been trading since September, so I know that that's not true. I find those type of stories funny. Let's see, Diesel Viper. I quit SPX 0 DTE when one loss wiped out several wins. Right. Because, yeah, the Iron Condor type. And so those are the high probability, extremely big, large risk trades where you do these super wide Iron Condors. And they're usually 10 parts risk to 1 part reward, and you're taking 50% of the profit if you can get it. And then they set a stop. Can you imagine setting a stop on an options trade? That is so childish. And they set a stop at like 2.5 or 3 times the potential profit received, which essentially takes the 95% strategy and turns it into about a 65% strategy with a guaranteed loss on the edges. Right? It is so frigging insane. I have fun just talking about that. All right, Vadim, let's see. He says, high probability strategy isn't mathematically profitable in the long term. Oh, I know that for sure. Bobby Smith, I started with high probability credit spreads on SPX, and as soon as I made some profit, I would get wiped out and have to spend a month getting back into profit. And that's basically how it works. You will just keep on. See, our strategy, our drawdown is so small that never happens. I have, over the past... I'd say over the past 2 years, I think my max drawdown is about 5%. Over the last 6 months, I can show you this documented trades that it's a little under 3%. Yeah, I'm not interested in seeing it, Luke. Sorry. Is Diesel Viper. That's exactly why Ernie started messing with this new method, I believe. Yes. Well, actually what happened was I joined the other 0 DTE service, the one without the dash. And I noticed that people were winning a lot of small wins, and then they would get these huge losses. And so I started suggesting my way of trading then, and people were amazed that I was bringing in these, $1,000 wins on $100 of risk, or a $500 win on $90 of risk, and they got mad at me and kicked me out of the service. So then that's why I started this service, and so now a lot of the people that were over there are now over here. Sorry to hear that, Luke. Conegs 1. How you doing? Conservative traders are happy with 0.5 to 1% per month. Yeah. If I make 3%, 4%, I am ecstatic. The past few months I've made, in this tough market, I've made about a little over 8%. And I know that that's not going to continue. And I'm going to probably regress back to the mean, back to the 4% or something. And that's fine by me. But 3% a week, Jesus. Maybe in a SIM account. All right, I can see that. Nobody is happy with 10% a year that doesn't cover taxes or inflation. Of course, what we're doing here will easily beat the S&P and inflation. Diesel says, I've heard of people committing suicide after taking max loss on credit spreads. Yeah, I've heard those stories. Multiscan 8, how you doing? Isn't profitability more a function of trade management and not the position, i.e. condor fly, and all positions have a theoretical probability of less than zero? Forget the friggin' theoretical probabilities. That's all bullshit. If you sit there and you think you're going to trade by the numbers and the probabilities that are in your platform, then what's a great analogy? There must be a really good analogy for something like that. I'll have to think that one over the weekend. So guys, I have a meeting coming up at 4:30. So I'm going to cut this short. Let's take a look one more time at where that market is. It almost made it down. I think who called 40.50? Somebody said 40.50. That was a good call. I thought we would get down to 40.44. All right. Thank you very much, NorCal Joe. I plan on it. Going to do some sunning down at Gayhead Beach on Martha's Vineyard, my favorite beach. Thank you. Thank you, Iz. Thank you, Multiscan. I hope you all have a great weekend. Peace to you all. If you're interested in the service, go to the link below. Take care. Hit that like button. That would be great. Thank you. See you later. All right. Let's see. Where's that music?